If you own your home and you're over 65, I need you to stop scrolling for the next 20 minutes, because right now, thousands of Canadian seniors are quietly paying $0 out of pocket for their property taxes, completely legally, and most of them found out by accident. Meanwhile, seniors just like you are draining their retirement savings every single year, writing a check to the municipality, never knowing there was a government program sitting right there the whole time, waiting for them to apply. This isn't a loophole, this isn't a scam. These are real, provincially legislated programs, deferrals, grants, and credits, some of which can knock your property tax bill down to zero or let you stop paying it entirely until you sell your home. By the end of this video, you're going to know exactly which program applies to you, what it's worth in real dollars, and the exact form number you need to fill out this week. Let's get into it. Here's the problem nobody talks about. Property tax is one of the only expenses in retirement that goes up every single year, whether your income does or not. Your CPP, your OAS, those adjust slowly. Your municipality's tax bill does not wait for you. For a senior living on a fixed income, that creates what financial planners call being house rich, cash poor. You might own a home worth $700,000, $800,000, and still be one property tax bill away from real financial stress. The programs I'm about to walk you through exist specifically to solve that problem. They were built, some as far back as the 1970s, because provincial governments recognized that seniors were being taxed out of homes they'd already paid off. So don't feel like you're asking for a favor here. You're using a program your tax dollars already funded. Let's start with the province that offers the most generous combination in the country. Now you might be thinking, if this is real, why has nobody at my municipal office told me about it? Fair question. The honest answer is that most of these programs are opt-in, not automatic. Local tax offices process bills. They don't proactively hunt down every eligible senior and enroll them. That's exactly why we're doing this video. Nobody's going to knock on your door with a form. You have to know it exists first. Number 1, the BC Homeowner Grant combined with the Property Tax Deferment Program. What is it? Two separate programs that stack together. The Homeowner Grant reduces the property tax you owe on your principal residence. The Property Tax Deferment Program then lets you postpone paying whatever's left at a low interest rate until you sell or transfer the home. What's it worth? The basic grant reduces your bill by several $100s, with an additional supplement for homeowners 65 and older, and larger amounts for those in rural or northern regions. On top of that, the deferment program means you may not have to pay anything out of pocket this year at all. The province essentially fronts the money, and it becomes a low-interest lien registered against your property, settled later from the sale proceeds. How do you get it? You apply for the homeowner grant directly through your property tax notice, either online through the BC government's grant portal or through your municipality, before the tax due date. For the deferment program, you apply through eTax BC. You'll need proof of age, and your home equity needs to meet a minimum threshold. One important update for 2026. The interest rate structure on new deferrals changed this year. Deferrals starting in 2026 accrue at a variable rate tied to prime, compounding monthly, whereas taxes already deferred before 2026 stay under the old, lower rate. So if you're in BC and already deferring, you're grandfathered in. If you're just enrolling now, the math is still favorable compared to carrying a credit line, but you'll want to run the numbers for your specific situation. You might be wondering, isn't deferring my taxes just kicking the can down the road? Won't my kids just inherit a bigger bill? Here's the honest answer: yes. The deferred amount does eventually get repaid, usually from the sale of the home or the estate. But for a lot of seniors, the trade-off is simple. Keep more cash in your pocket every month now while you're alive to use it, versus locking that money into a tax bill your home's future value will comfortably absorb anyway. It's not free money, it's a tool, and like any tool, you decide if it fits your situation. Number 2, Ontario's Senior Homeowners Property Tax Grant. What is it? A refundable tax credit, meaning you get it back even if you don't owe any income tax, specifically for Ontario seniors who own and live in their principal residence. What's it worth? Up to several $100s a year, and because it's refundable, it comes to you as a payment even if your tax bill is already at zero. The amount is income tested, so it phases out as your income rises, but for many seniors on GIS or a modest pension, you'll qualify for the full amount. How do you get it? You claim it directly on your annual income tax return using Schedule On-Ben. That's the Ontario Trillium Benefit and Senior Homeowners Property Tax Grant application. It gets attached right to your regular tax filing. This is the part that trips people up. If you don't file a tax return because your income is low, you get nothing. Filing your taxes every single year, even at zero income, is the only way this money reaches your bank account. On top of that provincial credit, don't overlook the municipal level. Many Ontario municipalities run their own separate property tax deferral or cancellation programs for low-income seniors, on top of the provincial grant. These are not automatic and not always advertised. You typically need to call your city's revenue or tax office directly and ask what's available locally. Now you might be asking, if I already get GIS and OAS, does claiming this grant affect those payments? No. This is a separate provincial program, and it does not reduce or interfere with your federal old age security or guaranteed income supplement. These programs are designed to stack, not compete. Number 3, Alberta's Seniors Property Tax Deferral Program, or SEATD. What is it? A low-interest home equity loan from the Alberta government that pays your municipal property taxes on your behalf. You repay it later, not now. What's it worth? The province covers all or part of your annual residential property tax bill at a low interest rate that's reviewed and adjusted twice a year. That's real, immediate cash relief every single year you're enrolled, without touching your monthly income. How do you get it? You apply through Alberta Seniors, Community and Social Services. You need to be 65 or older, a homeowner, and have enough equity in the home to qualify. The government pays the municipality directly. You never have to send a lump sum yourself. Repayment happens when you sell the home, transfer ownership, or choose to pay it off early. And separately, Alberta also allows seniors to defer the education portion of their property tax bill specifically, which can be layered with other relief depending on your municipality. Here's a question I get constantly. Is this legal, or is it some kind of gray area tax trick? I want to be completely clear. Every single program in this video is written into provincial legislation. The BC Deferment Program dates back to 1974. Alberta's SATD has been running since 2013. These aren't accountant hacks. They're public policy, funded by your taxes, sitting on government websites, waiting for applications. Number 4. Nova Scotia's Property Tax Exemption and Deferral Program, Halifax and similar municipalities. What is it? For lower-income seniors, this is the closest thing in Canada to what people picture when they hear property tax exemption, a combination of a payment plan, a rebate, and in qualifying cases, a partial exemption. What's it worth? In Halifax specifically, homeowners with a combined household income under a set threshold, currently around $32,000, can qualify for tax relief through a rebate or a structured deferral, with the total amount deferred capped at a percentage of the home's assessed value. How do you get it? You apply through your municipality's tax office directly. This is a municipal program, not provincial, so the exact income cutoffs and application windows vary by city. If you're in Nova Scotia, search your municipality's website for property tax exemption seniors or call their finance department directly. Number 5. Check your own province's municipal level programs. Ontario, Alberta, Nova Scotia, and Prince Edward Island all run some version of a senior property tax deferral. If you're in Saskatchewan, Manitoba, Quebec, or Atlantic Canada, the programs exist. They're just administered locally, which means your first call should always be your municipal tax office, and your second stop should be your province's Ministry of Finance page. Ask specifically, do you have a seniors property tax deferral, grant, or exemption program, and what's the application deadline this year? You might be thinking, this all sounds great, but what's the catch nobody's mentioning? Here's the honest one. Deferral programs put a lien on your home. That means when you sell, the deferred taxes plus interest come off the top before you see the proceeds. For most seniors staying in their home long term, that's a fair trade for immediate cash relief today. But if you're planning to sell in the next year or two, run the numbers with your accountant first. Deferral isn't automatically the right move for everyone. It's a tool you choose deliberately. Here's your action plan, in order. Step 1. Find your property tax notice or bill and confirm your municipality's name and your assessed home value. You'll need both for any application. Step 2. Go to your provincial government website and search the exact program name we covered for your province. BC's Property Tax Deferment Program, Ontario's Schedule on Ben, Alberta's SAFTD, or your municipality's exemption program if you're in Atlantic Canada. Step 3. Call your municipal tax office directly and ask, word for word, what senior property tax relief, deferral, or exemption programs do you offer, and what's this year's deadline? Municipal staff deal with this constantly. They will walk you through it. Step 4. If you file your own taxes, make sure you're completing the right schedule. For Ontario, that's Schedule on Ben. Missing that one form is the single biggest reason eligible seniors get $0 back. Step 5. If you're not sure which programs stack together in your specific province, a call to a tax professional or your province's seniors advocate office is worth the hour. Combining a grant with a deferral or a deferral with a rebate is often where the real savings show up. So no, there's no single law that wipes property tax off the table for every senior in Canada. But what does exist is arguably better. A set of real, legislated programs in every province that can reduce your bill, delay it interest cheaply, or in lower income cases, cut it dramatically. And most seniors simply never apply because nobody told them these programs existed. You now know the names, the forms, and the exact phone call to make. The only thing left is doing it. If this helped you, hit that like button and drop a comment telling me which province you're in. I read every single one and it helps me know which programs to cover next. This video is for general educational purposes only and does not constitute personalized financial, legal, or tax advice. Program rules, income thresholds, and interest rates change and vary by province and municipality. Please confirm current details with your provincial government, municipal tax office, or a licensed tax professional before applying.